Okay, so today I'm going to be showing to you something a little different that you can combine with these levels. But for the sake of showing everyone everything again, I'll just do it very quickly. So I'm going to remove everything. My chart is clean now. I'm going to go on a monthly chart. We're looking at Euro USD. I'm going on a monthly chart as always. I'm going to zoom in once. The last day I have here is 1st of April 1989. And just move this out of the way. Okay, so we're going to get our Fibonacci retracement levels, and obviously they're totally different from the Fibonacci levels, and whoever is new, we will explain this to you later on, what we're doing here and what levels we're using. Okay, so I'm just going to get the top over here. We're going to go all the way down and get the bottom. Okay, so we will put these levels in. I'm just going to change the background of the chart so this logo gets out of the way. Okay, so obviously we see very interesting points over here. We're going to put some more levels in there, but before I start putting in the levels, I'm going to use angles from now. Okay, so I'm going to change the color of my angles to white, and we have the horizontal levels right now. Okay, we have the horizontal mathematical points of interest, and now I'm going to get the angles of them, basically the sideways levels. What I'm doing is I'm using a trend line, and I'm going to right click it, and I'm going to press extend to infinity. Okay, because as the chart keeps moving and prices keep going, we will keep seeing these lines, and these are very, very important lines. And what I'm doing is I'm getting the tops with the tops, basically creating trend levels, and I'm going to get the bottom over here, and I'm going to show you what's happening right now. We're getting the bottom here, we're getting this, and we're basically getting a trend level, but we also got a reversal once price breaks. I'm going to explain this a little more. It is very important to understand your chart, and I'm going to keep doing this just for a little bit longer. I'm not going to go crazy with this. I'm just going to show you what I'm doing over here so you all understand how all of this works. Okay, so I got the top over here, and I'm going to just show you this just a little bit more with different levels as well. No, it's going to take me just a few minutes to do this, but basically what I'm doing is I'm getting tops and bottoms, and I'm taking long-term levels into account. And I'm going to show you how these three will connect with this one over here, most likely. So here we go. Okay, so this is basically using and understanding points of interest. We want to take price, for example, from past, okay, and connect it to some point in the future. That could be down there, that could be down here. For example, if we did this before and price came up here, it would be an interesting level to basically buy and sell. So I'm going to explain this to you just a little bit better now. So this level is not connecting with us, so I'm going to connect this one with this one over here, and then we have another area of interest, and we see the closing price. We can see this again work in the future at certain levels. Obviously this is a monthly chart, so we're not going to use the monthly chart much, but here we go. There are many areas that we want to connect over here, and we can find changes in trends once lines break these levels, but we can also find areas, well, very powerful areas of interest from these levels. It will be too much if I add this one. So I'm going to just go down to the daily chart, and I'm going to try find a few more levels. For example, this level over here. And I'll explain how this works pretty soon. I just want everybody to understand what I'm doing. We want to go back in time as well and try and find more areas of interest. What we're doing here is we're getting a few areas. Now you have to understand that these are just areas and they're not specific prices, okay? So I'm going to do what we always do as well. So I'm going to just connect a few more lines into this. And I'm going to start over here. And I'm going to try find trades for you today. So I'm just going to try and set this up as quick as possible. And then we'll get into questions and answers so everybody can understand what I am talking about and what I'm doing and how I'm going to find very interesting price areas of price for us to open positions on. Okay. Actually, I'm going to have to change the colors of these things over here. So the reason I'm changing the colors is so I understand which levels are which. It's very important to know what are our long-term levels, what are short-term levels, what are medium-term levels. So let me just do this over here as well. And as we see here, and I want to show you this, we have two reasons to sell price here. Basically a trend line and an area of interest, which is the 50% level over here. And we're going to try find more areas on other prices as well. But let me just go back a little bit and try and find something more solid. I think I have it set up somewhere. No, it's not here. Because it takes some time to do this on specific pairs. So you see it worked over here, but it also works down here. And if we connect price properly, okay. So Peter is asking how many points of touch? Free, minimum, or can you use two? You can use two. For example, you see what I did here is I got two on the downside. So 1, 2. Okay, this is pretty close as well. But then we got this one in the future, this one in the future, and then we got this one in the future here. You can do it this way as well by taking these two into account, or even this one, just this one, and doing it like this. These are shorter term levels, but they work. Okay, price and time is very important. It's very important to find price and time, and that's what we're trying to do. We're trying to connect price with time so we can get the proper entry level. And as we do this here, we catch these levels over here, but we also catch this and this and this. And if we go down there, we could catch something in the future as well. So this is simple. You know, it's not very hard to do. It takes some time, but once you do it, definitely pays off. So I'm just trying to find better areas for us to put this. Okay, can you all hear me? Because I turned on flight mode by mistake. Yeah, good. Okay, you can. So we can do it like this. You see, we got this level, and then we catch this level in the future. So I just want to ask a question. Do you all understand what I'm doing here? And who doesn't, I'm going to explain. Okay, so what I'm doing is, and the only way this will work for you is if you use longer chart frames, okay? Monthly, weekly, daily, nothing less. What we're doing is we're catching past to try and determine future. What we're doing is catching trends, okay? As you see here, you can see price has moved within this and this level over here. So what I'm talking about is from here to here. I'm going to explain a little bit better in another session the next step that comes after this. And in March, like I said before, we will have a course that runs specifically for these kind of for this kind of information. I'm breaking up. It's good now? Okay, great. So what I'm doing is, okay, thank you. What I'm doing is I'm trying to understand price movement, okay? When we understand price movement, we can understand that at some point in the future, if price has vibrated around this line, it will vibrate in the future as well. As you see, we're actually adding more levels to our 50% level, because I'm going to add a 50% level just in this area for you to see that we will catch some of these movement, and especially this one's here. So when you combine these two things, a whole new world opens up to us, because we understand better where price will vibrate. For example, as you see, price came past the 50% level here, but stopped at this level here, which was a support and resistance area in these areas here. Once we go to a smaller chart frame, this is when we start understanding things better. We have a stop, we have a stop, we have a stop. When we add more levels, we will understand. I'm just going to do this very quickly just so you understand what I'm doing. Okay, look at this. We have a stop, stop, we have a reversal, and we have a stop. If we go back in time, we have another stop. Okay? And it still works the same in the future. And it will in the future as well later on. So what we're doing is basically trying to understand where price will stop, move, where are basically points of interest for us to open trades and close trades. You can even do it in shorter time frames if you want to understand price movement like this, but this is too short to catch big and strong movements. Perhaps this level here and connected this way could determine that price will vibrate, or it's already vibrating at this area, and you can clearly see that it is. Here's our 50% level. I'm just going to add it like this. You can see that price is vibrating. We had price break it, reverse, up. So this is like something like you can put the idea of Elliott inside here and go A, B, C, up. Okay, A, B, and then C, and then you go down. So you're moving from one area to another. You see that price stopped at this level, but price also stopped at this level. You see? Now, obviously you don't want to just keep opening trades left and right every time price comes to these areas, because price breaks these areas. Like I said, it works in cycles. It's very hard to determine these cycles, and you will literally have to make this a full-time profession in order for you to understand, and still you will never come to that accuracy of over 80%, because it's practically impossible to have something like this. So to explain again better, what I'm doing is I'm finding areas where price will vibrate, and and using technical setups to understand what will happen with the market. I'm going to go back to a stronger chart. I'm going to go to 12 hours just so I can see a bit more and try and find other areas of interest. We can even use this level here and connect it possibly to this, and it will give us a different line in the future. We can actually do this. So we're going to try and catch the tops of price movement. And I'm going to show you how wonderfully this will connect. And I'm going to put some red lines in here so you all understand how this will connect in the future. For example, we have this level here. Once price breaks these levels, as you see, we have a stop, you do have a stop over here, and I'm going to circle this so you see what I'm talking about. You see, price came, back up, broke, we head to the next level. And by using the idea of compounding these trades, you can grab massive pips, but you need to understand something. As you see price here, and this is a daily chart, from the open did go 80 something pips, almost 90 pips up before making the move down. So and it obviously didn't go all the way up and then down. Most likely it went down, up before shooting higher up, because this is a daily chart. And over here, when it closed, let's say you're in the position, it retraced back for 10 pips, and then you have a retracement back from lowest price here of 30 pips. So if you are compounding this and using the pyramid strategy, the idea of that, well then you really need to have a bit wider stops. So what I mean by this is your first compounding position should be at least 20 something pips in profit before opening the next one. And then you secure a minimum of 15 pips, which is good. Now, many of you don't know the pyramiding strategy right now, and I'm going to explain it to you soon. But you can see price, look at this, price touched, bounce back, touch, bounce to the next level, we go down, and if we put the 50% levels over here in between these two levels, oh, we already have a level there. So let's put price between these two levels. So as you can see, price did come here again, broke this level, came close to the next one, back down, bounced here, vibrated basically, went down to the next one, and then we had a break. So do you follow? Do you all understand? Okay, great, excellent. I know it looks a little tough, but I'm telling you this is a much more profitable way, especially combined with rules of trading that I've given to you in the first session, and it's recorded, and you have it also in a PDF here, so if you don't have it, please collect it. These things combined with specific rules can make you a lot of money. Some of the most successful traders, from Gan to well, many of the rest, they never used indicators. They don't use indicators. Because I told you, for example, stochastic, MACD, all of these things, they cannot, in no way can you connect them to every single financial institution that's connected to the Forex markets. That means you're lacking a lot of information. Even this thing here, you see this thing here, where it says that 56% of the client accounts are going sell and 44 up. This is only C-Trader. This is not MetaTrader 4. This is not all the banks. This is, as you see, it's client accounts. It's not only our clients, it's every C-Trader client. But that's still not enough information for you to understand. 56% of them are selling, 44 of them are buying. That means nothing, literally nothing to you. Because many of these brokers are B-booking as well, so they're trading in their own markets. And this will never make you money or ever understand. It will never give you the understanding for you to understand what's happening with the financial markets. Go use 5 different brokers and put 5 different indicators on 5 same indicators on these brokers, and you'll realize that most of them will be different. Why are they different? Because they collect different information from the market. This market is too big for you to have an indicator that will tell you what's actually happening. It's impossible, and I'm telling you this from the inside of the market. So I'm going to try find more levels here. I'm going to try connect this one with this one and hopefully get this price down over here. And I'm going to make this level red for you. So I'm collecting this one. So let's see if we got something. So the first line gives us this point here, okay? The second red line that I just put gives us this point here. And the next line I'm going to put will connect these and this level. So all of these points can be used for future price, and I'm going to show you. We can use this one. We can use this one. But obviously it's very hard for you to understand where price will go, because it's quite tough. When there is nothing over here and you're trying to add a level, I mean, you can put it anywhere. So that's why I'm saying you need to connect at least one or two together. So what we would do is, let's say price is here, we don't see this yet. You can start trying doing things like this. You see, connect this level to this level, and let's see if it connects somewhere in the future. Not yet. So that's why a minimum of 2 levels should be connected, but on a longer chart. A longer chart frame is the only way that you can actually see something into the future, basically. Now, what I would advise you to do is trade on 3 pairs. Most of you from Master Traders Group only trade, I believe, GBP, USD, JPY, so cable, Euro USD, and USD JPY. So it would be wise to have 4-hour chart frames here, and then daily chart frames here, and then either weekly chart frames there. And that would help you to just scroll through the market very quickly and understand where price is. Because I fully recommend you to do this. And before you open a trade, is to look at longer time frames. I'm talking about monthly and weekly, and then daily and long-term hourly before going on something smaller. So Craig is asking, so should we start on the monthly charts and then move down to the daily? Yes. What I would even advise to you to do, if you want to understand the market even better, is for you to start on a monthly, go to the weekly, go to the daily. But I don't mean, I really don't, what I mean here is I don't mean do this, just look at this here and just go, okay, there's nothing here, you go, let's go to the next one and the next one. I mean, literally, until you fully don't understand, if you can't say on the top of your head where the next resistance points are, you don't know the chart. If you can't say on the top of your head where the highest price on gold or where the lowest price on gold or whatever you trade is, you do not understand the price. So that means what we need to do is at least go back a year or two and look at these points and try and catch something. For example, let's get this over here. You see, I'm taking this one. Actually, we already have a level there. So let's collect here. I'm taking this and this to catch future price. But I'm just going to take the top, so I'm going to go over here. So we have the top over here. We'll get the top over there. And we'll go down with it. I'm going to make this line, just so we don't lose it, light purple. So we have, well, let's say this area, but not really, because there is a big break from it. We have this area over here. We have nothing here, proper breakout. And then we caught this level here. And this is pretty much the top of the close. And I'm going to show you why it's the top of the close. Okay, you see? That's exactly where price closed, more or less. And if we go into the future, we have the next line here, and if it breaks, we have this line here, and we have the yellow line here. So these are pretty strong areas of interest. Let's see if we have something in the future from the price level here. Well, we have the downward movement over here. We are about to break the 50% level here. We didn't break it yet. This is a strong area here because this is the 50% area of the highest high Euro USD ever had and the lowest low. So this is a strong area. If we manage to break this and go downwards, I would definitely tell you we're going down if we break the monthly chart, and we haven't yet. As you see, price tried to break it, and it's right now right there. You see, this is a monthly chart. It's right at our 50% level. Did not break it. It's a monthly chart. It broke it here, but as you see, it's vibrating around it. up and down, up and down. So what I'm telling you is we could see another movement downward on Euro USD before price going possibly higher. But let's try and find the trade for you all. I'm going to take any questions you might have right now. So if you have some questions, any ideas, tips, or something like this, I'm right here. Yes, Simon is asking. Okay, sorry, you're asking why do I take the 50% sell the fibs? Because I believe in mathematical points of interest, and it's basically the levels here is 0, and then I just keep adding 12.5 on everything. So 12.5, 0 plus 12.5 is 12.5, 12.5 plus 12.5 is 25, then 37, then 50, 62, and so forth. So I'm going to explain to you why. Yeah, Michael, they are very important. And once somebody understands how they can work and where they've been strong, they can actually, you will make very good money. But if you want to make money, it's not only about indicators and trading stations and blah, blah, blah. I mean, you don't even need little spreads to make money. I'm not only saying this as a broker. The spreads I trade with are much higher than what you guys trade with. Because a good trader, and I'm not saying anything bad, a person who actually makes consistently money doesn't really care much about spreads, doesn't really care much about execution, because financial institutions do not scalp. People who make a lot of money, they do not scalp. They try to find long-term movements. And these 50% levels, as you see, work very, very well, and they're not used much, and I'm very happy that they're not used much. And Simon, just to answer your question, as you see, I got the whole picture involved here, and you can clearly see that price does vibrate within these levels, and we have price stop here, price stop here. We have it on certain levels, and if I add the 50% level within the 50% level, you'll see that price actually does stop at other areas too. So you see price stopped here, we have it here, not every single time, but it will work more than the Fibonacci levels. Not really. I don't use, and from my trading experience, we don't really use too much of the traditional stuff that people use in this industry, because most people who use these things don't really make any money. So I think that's one of the clear reasons. Simon is asking, is it to set yourself apart from any other traders, because Fibs is used a lot. Not only that, stochastic is used a hell of a lot, and all of these things, but these things never made me money. Fibonacci levels never made me any significant returns. I'm sure they're very good, and I'm not saying anything bad against them. I'm just saying I like this. This has made me money, and it's made me consistent in what I do, so this is the reason. Yeah, Craig, it's very important to practice all of these things, and practice makes perfect. We can sit here and read books and talk to each other and give ideas to each other, and the most important thing is for you not to be attached to somebody else for trading. You understand? If you're attached to me for trading and I die, let's say, how the hell are you going to make money? So this is why I want to teach you to trade by yourself. This is why I give you rules that took a long time to set in. All of these things were not created overnight, but they can be used by anyone, even a 5-year-old child, as long as it understands how to use little lines and risk management, which comes as an essence for trading. And these 23 rules, once they're understood, I literally give you my word that if you follow these 23 rules, you will make money. You will make money, because anyone that's followed them has made money. You break one of them, don't blame the rules, don't blame me, don't blame anyone, blame yourself. Because when you're trading in an industry, whatever you're doing, we're all grown-ups here, so we need to take responsibility for our actions. So if I say sell Euro USD now and you sell Euro USD now, you took an action. I'm not going to tell you something like this. And when we tell you something, there are very high chances of it happening. Just like Monday, we told you Euro USD sell. It went down almost 100 pips, I think, or something like this. I know we got 90 something, but we compounded it. Does anybody have any other questions in regards to what I'm showing over here? So you see, Euro USD has our attention now because it's at this area here, but we're not going to buy or sell until we don't have a better indication. And the better indication is obviously higher movement. We don't want to be obviously last. Yes, Johan, that's the way to ask questions. Just type in there. Just type in there and then, yeah, you can ask me anything there and then I'll see. You know, even if it's a personal question, I can answer it later on or even reply to you like this. Okay, technical setups are very, very important. The law of cause and effect also works very well in the market. To be honest with you, before the effect happens of something like this, there is a cause set into the market a long time ago. So the cause is just an effect from something that happened before. And that something can be something, well, that happened mathematically. And this is pure maths over here. So, you know, it's pretty easy to find these levels if you look for them. Just a moment. So I just want to show you something that I've just drawn here. So this is what I want to show you. You see this channel over here? This one here? We got this bottom over here combined with the previous bottom over here. That bottom gave us a channel here, gave us supports over here, gave us supports over there, created for us a flag over here, gave us another channel over here. This level gave us another support over here, resistance over here, and then once these levels break, we have to pay. It's very important to pay attention, okay? And I'm not showing you anything. We're not building a rocket here. Let me just see. We have a question, I believe. Okay. Johan asks, what is the shortest time frame used for putting a trade in? When we trade on the private investment club, the shortest time frame we will open a trade on is normally 4 hours. We don't go really under that because we're not trading for small profits. We're trading for impressive profits. We're trading to compound our profits. That's what we're trading for. So normally 4 hours. We verify 1 month, so we look at the 1 month chart, we go to the weekly chart, go to the daily chart, and do the execution on the 4 hour chart. So just like Benjamin Franklin's quote, if you fail to prepare, you prepare to fail. Us doing this is preparing, okay? So we're preparing. We're creating a cause that's going to give us an effect in the future. And to be honest with you, if you want to be a successful trader, you will not open trades every day. You don't need to open trades every day. You need to find an excellent setup and compound it like crazy. Once you compound it, and for those of you that don't know what we're talking about, compounding is basically this. Let's say this is a $10,000 account. and I'm going to open one lot, okay? And we're going to open it here. Price broke this level. We expect it to go back down to this one, and we open this. Obviously, the first thing we do is set a stop. The first thing is the stop. And once price goes into a decent profit, what we're going to do is open another trade in the direction of our other one and move the stop loss into profit, add the stop loss here. As price goes even lower, we're going to put another trade down here, move the stop loss of this one, and put it down in profit with the next trade. So we have two profitable trades and one loser. Once price keeps going more down, we're going to do the same over here and move all the stops into profit apart from this level. And we're going to continue doing this as long as we can. And this can make you 100% return very easily. And what are the risks involved? One trade, this one here. Once this one goes into profit, this is the risk, okay? But what are you doing? You're protecting your capital 100%, okay? So the only risk you have at your capital is the first trade. Once the second trade is open, forget about risk of capital, only risk of profit, small risk of profit. About 30 to 40, maybe 50% of your profit can be wiped out if price goes back up. And what I mean profit is on this trade, not the profit you made. Once you open free trades, you're good to go. Now you're making a good 1-2% of your account balance on a 10,000 if you start with a lot, maybe even 3%. Once you go to the fourth trade, you go significantly higher. Fifth trade, even more. And if you come to 7-8 trades, I'm talking about more than 10% ROI. You guys understand compounding now? Many of you do already, but there's quite a few new people here. Good, very good. Very good. The idea is not to scalp. If you're a scalper, chances are, okay, if you want to be a scalper and you're making, if you want to target 5 to 10 pips, you need to have a stop loss. That stop loss, what are you going to put it? If you're targeting 5 pips, are you going to put a stop loss of 2 pips? That's your spread. You're going to get wiped out as soon as you open the trade. So if you're trading to get 5 pips and you're putting a stop loss of 10 pips, that long term will make you lose money. I told you, and I'm going to show you, I just have to do this over the weekend. I will show you clients who, obviously their names are going to be wiped out and everything, so you will not see their names and their account balances, but you're going to see their success rate of trades. There are people who win 97% of their trades, but have lost all of their money. How can 3% losing trades make you wipe out your account? Very easily. You're targeting to make 40 pips, but your stop loss is 200 pips. No matter how much money you make, you will lose money. So Simon is saying, how do you determine your stop loss with your long-term trade, and in what ratio are they compounded to your winning? Okay, the stop loss is done based on percentages of the account. We will normally never risk more than 1, 1.5, maybe 2% per trade. If you risk 2% per trade, you need to lose 50 trades in a row in order to go wiped out, and that's very hard to do. The stop loss is determined with percentages, but we also look for points. So if I'm opening a trade here, I will look at the last high, and then I'm going to determine what kind of percentage I need for my stop loss to be here. So that might make me open a smaller trade in the beginning and continue compounding. Now, at what ratio do we compound? I'm going to explain to you. It's like this. If you open a trade of one lot, the second trade cannot be bigger than the first trade. It has to be smaller than the first trade. So if you're opening one lot, the next one should be 0.8 or 0.9. Okay? And then all the rest of the trades can be the same level as the second trade, but never higher than the first trade, because that will make you lose. At what ratio? We are going to compound it every 15, 20 pips in profit. The first one, and the rest can be every 15 pips towards 10. Should the stop loss, Johan is asking, should the stop loss not be away from the next resistance or support? Well, if you have the capacity in your account to open a small trade as well, then you could put your stop loss a little higher. But I normally advise stop losses to breathe a little bit. So here, if you're opening a trade here, your stop loss should be about 50, 60 pips. On one lot position, that's $600, so that's 6% of your account, and we wouldn't want to do that. So we're going to open a 0.5 or a 0.6 and put a 60 pip stop loss. That's what we would do. Any other questions? So no questions. Okay. Okay. No, we have something here. Okay, we have two questions. First one is Johan. What is the average % win per month on this system? Well, last month on this kind of trading, on a more aggressive account, we made 230% in basically 2 weeks. The risks are very small. Yes, Morten. Morten says to compound, you have to check all the time. Of course. But you can make a significant amount of profits in about half an hour. It's all about opening the correct trade at the correct time. You can actually, we have algorithms that manage our trades, so we don't have to always be there. So algorithms manage our trades, and they put in the stop losses and take profits and put in pending orders or open positions every X amount of pips. So we've created these algorithms by ourselves. Johan, the average win per month on this thing can be anywhere from 10% to as much as you like. It depends on your activity and depends on your success rates. What do you, Kiri? What do you mean? Where are the lot sizes? If we want to change lot size, we can change here, or type it in. You see? Is that what you mean? Kiri, is this what you mean, or you're asking where are the lot sizes? Is this what you mean? Where are they here? Well, you can see smaller without a problem. If somebody's trading with 1K, I would advise them to go to margin. Yeah, to start at about 2.5. 2.5 and then you go lower, or even 0.2. Yeah, Johan, you can, and I'm gonna start. We're gonna start sending out the majors, basically analysis on the majors from the new week, and especially from the new month, it will be much better. But Kiri, look, it's all about percentages. I do not base anything on actual value of money. So the risk management calculator that's probably attached to this right now clearly identifies you to open what kind of percentages. Like I said, you should not risk more than 2%. So if you have $1,000, that means not more than $20, right? So you would open a trade based on your risk reward and based on your lots. So forget about money, use percentages, because percentage gain doesn't matter if you're trading $100, $1,000, or $100,000. Percentage gain is exactly the same. 1% is 1%. So based on that risk management calculator I gave you, put in your balance, put in your risk, put in your lot size, and it will tell you what kind of support and what kind of stop loss you should put. Johan, once again, yes, you can. USD JPY will be set, but I can't do it today. I'm going to have to go into a meeting in about 30 minutes, so we'll have to end this in 10 minutes, which is exactly an hour since we started. So let's see if we have something over here. Well, you see price is not really moving. We're still relaxing. Nothing special happening. Okay, just do you guys have any questions for me before I let you go? Well, thank you guys. Very good. Like I said, they're just gonna become better and better. Today, I wanted to briefly show you basically the sideways points, And I want you to practice this a little bit by yourself, but try catch major ones. Don't go on 4-hour charts to find them. Be on daily, weekly, and monthly. Basically start at the monthly, add your major ones, try to separate things by colors at least a little bit, perhaps bright red, more medium red, and then light red for sideway lines, or, I would fully recommend you to do something like this, because here it looks crazy, right? You don't even understand what's happening because we did most of them on the daily chart. But when you go on the daily chart, at least you can see what's going on a little bit better and where price could in the future move. For example, we are here, okay? And this is a daily chart. So what could happen in reality here, because we had a couple of red days, daily days, so all week we are red, it's only about time for it to go up. So what I could tell you is on Monday, if this doesn't break, this price could move up to this level or perhaps create a double top before moving down towards somewhere here. Very good, Craig. Very good. Michael McCoy says if Euro USD breaks the 50% monthly fib level, should we look at targeting 109? Yeah, most definitely. I would say first level would be about 110. Okay, and I'm gonna show you why I mean this. I'm gonna get this level and this level, and I'm gonna show you why. You see, it's right there. Everything is right there. Obviously, price won't just shoot down, or maybe it will, but here to here is a good 170 towards 100 pips area. So yeah, we could target there, but make sure to see this 1, 2, 3, 4, 5 red days on Euro USD. Euro USD and other pairs don't move in one direction that much without reason, and there's no a major reason right now. Johan asks, can we send analyzed charts for you for betting? Yes, please do. And most of you have my email address, so here it is, and I would like you to send it right there, and then I can give you more indications on what you should do. It would be good, because then I can point you out towards what you're doing right and what you're doing wrong. But thank you all for coming. I'm going to end this right now, unless somebody has any important questions. I'll just wait another probably about 120 seconds. So if you have a question, just say yes and then continue typing it, because I have to get ready for my meeting. You're very welcome, Kato. Thank you for coming. Okay, everyone, I wish you an excellent weekend, and you shall have an email from us on Sunday regarding the new week. Michael, thank you for coming. Johan, thank you. Mario, thanks for coming. You're gonna learn quite a bit. It's good to have you here. Thanks, Craig. I'm gonna be working. I'm gonna take a break for the next couple of hours. Not a break. I'm gonna have a couple of meetings, and then I'll be back tomorrow properly and in the evening. So thank you all for coming. I wish you an excellent weekend full of happiness and prosperity, and see you soon.